This documentary is supported by EBRD.
Welcome back to our series with the EBRD, where we uncover the Bulgarian startup ecosystem's stories, challenges, and breakthroughs. Today, we explore one of the most crucial milestones for any startup, Series A funding. So what exactly is Series A funding? It's the stage where startups secure capital to refine their product, expand into new markets, and scale operations. It's also where investors look for clear product-market fit and the ability to execute a go-to-market strategy. 10 years ago, hearing about a Bulgarian startup raising Series A was rare. Now we see companies securing these rounds regularly, proving that our ecosystem has the talent, resources, and determination to compete globally. Back in 2011, Bulgaria's startup ecosystem was in its infancy. Few funds, minimal infrastructure, and a handful of entrepreneurs learning on the go.
It was 2011 when betahaus started officially in Germany, 2012 officially in Bulgaria. It was a pretty early stage. Let's say there was no ecosystem. There were some really great entrepreneurs back then, but there was no ecosystem. So betahaus filled a place that was needed. There was one fund back then, only one. There was no really early stage fund. betahaus had to fundraise from individual people, from angels. We had to write our first business plan. We didn't write anything like it before. It was a real estate business, so it was a lot of, are you crazy to do that? No one would be willing to work like that. No one would be willing to put their laptops on a table and leave them with so many people around. And there were no mentors, which was essentially the reason for you to learn everything on the go. And the reason for the early supporters and investors to be willing to take a risk on people who have not been there.
Fast forward to today, and the scene has transformed. Accelerators, co-working spaces, and venture funds now support a growing pipeline of talent and innovation.
I think the ecosystem is growing stronger and it's looking better than ever, in my opinion. We're still not where we could be, but we're on the right track. That's personally what I believe. We're seeing so many funds now that invest that only 7-8 years ago were just a mirage. So, there's an abundance of capital if you wish. Still, there might be some more in the early stages, there might be some more in the later stages, but compared to some 7-8 years ago, I think it's looking sharp. We're seeing an exponential growth of companies as well, of people willing to start their own ventures, which is amazing. And Bulgaria is ranking first among youth that want to start their own business. So, this was according to Euro data from last year. So having said that, I think we're in a great shape in the potential phase. That's how I might frame it.
The ecosystem is developing. We still have a lot of work to do. As you know, only a few years back, there were 2-3 funds, and right now there are more than 10 operating VC funds in Bulgaria. So there is capital, there is new capital coming in 2025. Yeah, we are expecting to see great projects.
Amazing.
So I think Series A currently is the Swedish Spot, because you've already have your traction. You have provided that you're worth something, and someone is willing to pay for your product service. And I think in Bulgaria, there's plenty of capital specifically in that sector. So for all those guys that have validated their product and they're willing to scale, good news, you're in a very good spot.
Yeah, if we're talking about Series A financing round, I think it's much more complicated than finding seed capital, because companies must demonstrate a lot more than a great idea and big enthusiasm about their project. So we expect to see a lot of things. If I have to give some kind of a checklist, I would say we expect that the companies would have fully developed product and service. They show some revenues already, or they show great potential for generating revenue in the near future. We also expect to see their house organized, so we expect to see optimization in their business processes. We also look very closely at the team. However, when we're talking about Series A financing, we're looking and examining the team more closely. We examine the composition of the team, whether the skills are balanced within the team, and also how different members are working together. So, because the company is already operating and the product must be developed, so we can examine how team members are working with one another.
Normally, when we look at a Series A company, there's a few things that you would look at differently. But I will focus on two main things, right? The first one is product market fit. Generally, at Series A, you're looking for some traction, so you want to see that indeed, some evidence that there is indeed a pain point, and this pain point is actually being resolved by the product that the company is providing. And the key signal to look at for that would be, well, what is revenue growth, what is user growth, and what is revenue traction? Normally, we would target somewhere between 1 to 2 million as a minimum ARR for a Series A. The second point that I'd say is also very important when you're actually moving from C to Series A. The team is always very important, right? So everybody's going to say team, so that is clear. But there is a bit of a difference when you look at between seed and Series A and then beyond that. And I think at Series A, you need to see already the ability that the team has or not to actually scale this product and actually commercialize it and execute on a go-to-market strategy. But it's not as easy as just looking at who are the members of the team and whether the team actually has all the skills that it requires. Actually, it is even more important to see whether the founder or the core team have the ability to hire and to lead the team that is going to execute properly the go-to-market strategy. So those I'd say are the two key things that would differ. There's more, but these are very important.
Let's take a closer look at two Bulgarian success stories, OfficeRND and AMPECO, two companies that clearly show the potential of Bulgarian innovation when paired with strategic funding and a clear vision.
Now, let's hear it from the founders who have successfully been through that. How did entrepreneurs feel when they knew they had secured Series A funding?
Relief on one end, and then, oh my God, new expectations, new investors. So a little bit of like pressure that we felt on ourselves once this has been done.
We are a VC-funded company. We raised our Series A in the end of 2022. It was led by a US VC, a Silicon Valley-based fund called BMW I Ventures. And the name creates the association. Their single LP is BMW, or at least was at the time where we fundraised. But they are not a typical corporate VC. Their thesis is around tech startups, and we fall into that category. And our Series A also had our existing investors participate as well. Our seed round was led by LaunchHub, a Bulgarian fund, and Cavalry, a German fund, both early-stage investors, and they called it our seed round before that, and they participated also in the Series A.
And then it's like, okay, let's get to know each other, and usually things change. Every investor comes with some sort of a thesis in their head. They have a very clear idea why they bought you, and the CEO or whoever led the negotiations kind of knows that. Nobody on the team usually knows that, and there's a new strategy, there's a new focus, and suddenly you have to revamp like teams, and people are already like have done this for like you've been through pre-seed, seed, and now it's Series A, so 3-4 times. Some of the people are fine with it, others are like, oh my God, okay, that's so much change, and I thought this product was very important, now you're telling me forget about this product, it's a new thing. And then you have a new board of directors, and you have to figure out the dynamics there. So that's why I'm saying tension and expectations suddenly appear, and then you get into execution mode and so on and so forth. So mixed bag, I would say.
Oh, it was all part of the plan, and it was a milestone, one of many milestones that we as a startup had to achieve. Funding is what's in this type of company, this type of business, where you're trying to get to grow faster than what your revenues allow for, and you do this by getting funding from venture capital. For us, it was an important milestone because it allowed us to continue on our growth path. But it was the feeling. It was mostly about, well, job well done. It's good that we have this, but it's just something that's part of the job, and we now have secured this one, and we continue with the other tasks and continue with the growth of the company.
How can you build a product that scales internationally? Turns out, you just have to be ready to build the best product right from the start.
We've always tried at AMPECO to build a product that can be sold globally and that can serve the global market. So what our product is has been defined by this strategy to a certain aspect. But there are also market-specific things that we need to adapt, things that have to do with the regulations that are in place with regards to EV charging in certain markets, with invoicing, and things that are market-specific. We follow the following logic. We have to grow by being in the markets where there's some readiness for our product, so more developed markets. For us, this means Western Europe. But at the same time, we are also putting focus on markets which are developing but will be big eventually. So North America for sure, but also Southeast Asia, Australia, New Zealand. But the way we've divided our attention is we're more focused on the marketing and sales on the Western Europe, and we are more opportunistic on the wider market, but making sure that the product is applicable also on other global markets.
In this whole scenario, international expansion puts a lot of pressure on the company in terms of complexity that it creates. When our current investors, and again, this is the post-Series A investors, we now have a growth equity company invested in us, they always say the same thing. For the stage at which you are, for the size of the company in terms of employees, you are having an incredibly complex international business that we have never ever seen. Keep in mind they have a very American perspective. OfficeRND was the first European startup that they actually did, especially with exposure to Bulgaria. And they were just mesmerized. They were like, oh my God, okay, you have 4 currencies that you support. You have 5 offices. You have people remote, you have people in here, you have your product engineering on one side and go-to-market on the other side, and then finance, and it's just a mess. So what I would say is, unfortunately, you will have to live with this complexity from day one, but try to not be us in the sense that we basically were open to any market. We're like, wherever we have demand from, because we're very strong on the digital marketing side, we're very fortunate to get a lot of digital marketing inbound interest. And we were like, we don't say no to nothing. It's like, wherever it comes from, we're going to take care of it. And through sheer perseverance, grit, and a lot of effort and blood and tears, I would say, we were able to get to this point where we service most of our customers. If I have to redo it again, I would be like, okay, let's bet on a specific market, geography, segment, I don't know, vertical, whatever it is within your own market. Start with that. This is our beachhead. We own it, we grab it, we get it, then expand to the next one. So that's what I would sequence them. Again, sometimes this is just not enough to satisfy your investors because they're like, we want growth, and you're kind of forced to get whatever comes your way. This is what happened in our case. But if you have the luxury of having like investors that can wait a little bit for you and you can show them the sequencing and it actually works, you're going to be in a better position by the time you scale.
Market is not popular for. We are not the market where you'd expect a leader in e-mobility to appear and to come from. So we had to overcome this by having a product that really screams that it's great and that's what you need. In order to be able to go to Norway and sell to the companies that are way more advanced in terms of the market, the penetration of electric vehicles, we had to build a product that is really not just marginally, but much better than what the alternatives are, so that we can overcome this perception that we're coming from market where how do you know what you're doing, guys?
Here's the thing I realized about Bulgaria specifically, maybe other Eastern European countries, maybe Central Europe as well. Unfortunately, we have a small market, And that small market is not enough to sustain any kind of business that is going to be beyond like a lifestyle business. If you bootstrap, if it's just a lifestyle, a hobby kind of business, Bulgaria is fine, and the region and all of that. If you really want to do a truly global company, you will have to pretty quickly think about, or actually even start selling internationally first before you potentially go back to these kind of smaller markets.
Scaling internationally is a milestone that tests a startup's strategy and resilience. For Bulgarian startups, this often means venturing into markets like Western Europe or the US, adapting to local demands, and overcoming perceptions tied to their origins. After you've raised money, you have to plan your finances carefully. Depending on the source of your budget, you have to rethink which areas make sense to invest in.
It very much depends on the company. What I have seen from most Bulgarian companies, they tend to follow usually the founders, and in Bulgaria, most of the founders are actually developers. They start something very quickly with a friend or a colleague, and then it's a whole company. So when you have a product founder, as we do, the company is far heavier in terms of organizational structure on product and engineering, naturally. I think, at least in Bulgaria, usually we're a little bit behind in terms of go-to-market, like marketing and what we do there and how we approach this whole thing. We don't have that many professionals that have done it before, and it's not in our DNA, by the way. Like if you go to the US, everything is about marketing and sales. Over here, everything is about product engineering, like making sure everything works great and putting functionality on top of functionality and all that. So long story short, to your question, we were very heavy and we still continue to be very heavy on the product side. This has been our differentiator. This is the reason why we got the latest kind of investor on board. Post-Series A, investor. They thought our product was superior. And we were always very light on sales. So what usually the investor does, most of the investors, by the way, that you will get are very much specialists and their expertise is go-to-market. So the good investors are actually going to take some time to understand your structure, your weak points, and all that. And the good investors are going to then tell you, okay, we think you have gaps over here. Here's the revenue model that we together believe we can execute on. This is going to get us to the end goal that we have from an investment hypothesis, because they have an investment hypothesis, they have an Excel sheet there. They're going to try to get you to that point. So we think that you can achieve this by adding this many SDRs, doing outbound versus inbound, marketing, and all that. So they're going to help you with a blueprint of what has worked for their other companies. And they're going to try to lean into that and get you to do that. The good investors will, however, listen and will balance out with your point of view so they can take into consideration what you know about the market. The bad investors are going to shove it down your throat and they're going to be like, do that, we can guarantee you success. You are probably not going to be convinced. And then it usually fails. That's what happens. I think we had both of that happening to us. We've seen a good investor, maybe someone that has been a little bit too assertive in a specific direction. And that kind of led to mixed success. But usually investors are, at least for Bulgarian startups, I've seen them push very hard on the go-to-market side.
Ideally, you would do this in advance and you would know why and how much you're raising and for what. And this is how it went for us. We had a financial model and a business plan that we crafted following a certain growth strategy that we had. And so the funding was to back these plans and to allow us to get to the next milestones. For us, the Series A was to expand our customer base at a moment where we were at around product market fit. So we had the product that customers want, and being an enterprise software company, it meant that we had to scale our sales organization so that we can get to these customers and showcase the product, be able to close deals that are quite complex and lengthy in terms of the sales cycle, but also to continue to building the product so that we can provide what customers need from our solution. We are also in a space which evolves very quickly. We're in the EV charging space that's tied into e-mobility. So it's a space that develops at a certain high pace. And with that means that we also, as a company, our product, our service, they have to evolve with the market. And we needed this this investment so that we can grow with the market, outpace it ideally, and gain market share.
It's a different business line. So real estate is it's different, financial strategy that you have to do. For betahaus early days, it was mostly about reinvesting in the business itself, in the community, in the events, in the equipment, essentially fostering a community, an ecosystem around what you provide as a service, so that becomes an essential part of it. And let's say we didn't spend money on marketing back then. It was our marketing was the time and effort we put into building up some series of events, pitching contests, building up internally knowledge sharing events, building up a network of people, helping other players in the ecosystem, providing them with a space, providing them with just a place to do what they do, essentially. And that was where we invested. It was we never bathed in money, let's say. So bethouses isn't your traditional high growth, rapid growth, blitzkrieg type of startup. It's a much more slowly but surely type of growing business. And in that sense, for us, it was always having enough capital in the bank for sufficient time upfront, so that whatever happens, you're still afloat. Do not over-invest aggressively, and just always have a long enough time horizon, because in our line of business, in betahaus's line of business, things move a bit slower, and you just have to be there when opportunities arise. For example, when you can open up a new location, or when, for example, you need to cut a little bit of the cost factor because, let's say, COVID hits, and you still need to be alive through that period on the other end. So we were, let's say, a more moderately aggressive company, and it paid off because even, in the years where betahaus grew outside of its first location, it always did so with, the ability to preserve the business in a way that it can withstand COVID, it can withstand movements in the occupancy rate. I think it's a brilliantly operated business. So a bit different than a startup, but you have to know the market that you're in and how you have to play that game.
Raising Series A is not just about capital. It's about choosing the right partners who understand your vision. Successful founders stress the importance of having a scalable product-market fit, a strong team capable of executing a global strategy, and clear communication with investors.
I mean, there's so much that a founder can share that may be valuable to others. I would say we've talked a little bit more about fundraising and the paths that the company follows. I think there's one thing that's important, I think, for founders to make the mind about. It's what kind of business am I building? Am I building a high growth business? Am I building a business that may be profitable, but it's not necessarily something that would be a $1 billion company? Whether you pursue VC funding depends on what you're building. Not everyone should build a startup and go after VC funding to get these milestones. But if you do, you have to be targeting a large market. You have to know that there is a path for this high growth to be achieved, because these are the type of businesses that venture capital backs, and it makes sense to be backed by venture capital. And if you're doing the other thing, where you're building something that's valuable, could be sustainable, can grow, but not at this pace, but you're trying to find funding through venture capital, you're knocking on the wrong door, and you spend your energy on the wrong thing.
Talk to your customers and find out their pain points. I think they're similar pain points regardless of where they are. If you really work hard to nail and solve one of their pain points, their main and most crucial one, I believe that you can scale to any location that you're willing to scale to, as long as that pain point is there. So the common denominator, essentially, is the pain, the problem that you're solving. If the same people have it, regardless of their location, they will love your product. So you need to be 100% sure that you're solving their most painful problem. And if you do that, you can easily jump into a different market, different location, different geography.
Being in the sweet spot of Series A, that's the good news. The bad news is then once you have your money, once you have your ingredients, you have to cook the dish. And that's when it gets serious and very complicated. And I think this is the second chasm of death for most companies. First one is before validation, and second one is right after you raised some money and you're thinking, yeah, I've got it, then you need to expand internationally. And I think as a rule of thumb, what Bulgaria lacks is, we're improving, we're getting better, but what we lack as a rule of thumb is sales and marketing experience to sell on international markets. There are historical and cultural reasons for that, but when it comes to, expanding into new markets, especially within the EU, where it's a very fragmented, market need and market expansion, then that's where most companies actually hit the wall.
But in terms of business and in terms of how we help with their day-to-day or strategic points, I think there's 3 levels to that, actually. Number one is the EBRD is indeed, so EBRD Venture Capital is indeed investing from a 250 million fund, but we are part of a 70 billion institution, and therefore with thousands of customers in its books. And so there is the ability to actually provide quite a bit of networking opportunities for the companies. Example, a fintech. We have working relationships and business relationships with almost all of the banks in Central Eastern Europe, right? So I think that's one way of opening doors. The second point would be at board level. I think our guys are quite experienced. We're very experienced. We've seen a lot over the years. I mean, myself, I started a long time ago in the front office doing small investments in SMEs in equity, starting from companies that bagged tea into small bags and sold them in the US, and sort of gradually then into telecom and infrastructure and power, and now into high tech. And so all of the guys that we actually have in the team have a lot of experience and hands-on experience and board seat experience. So they can provide quite a lot of insights in terms of what others did and what works and what doesn't work. And so I think that's a second element. But at board level, I think what is important, because I think one of the key issues that a founder will face when they're moving to Series A is, I'm scaling, but am I doing this right? And so you need to have a core team. You need to have people that you can talk to. You don't want yes men or yes women, right? So you want people you can have a conversation with, and they will not help your confirmation bias. You actually want people to have a proper discussion with, and I think that's where we help. We understand the pain, the burden of actually, the very heavy burden of actually being a founder, and we want to actually try and help with that particular point. And the third is we can always, through the network that we have, we can actually access experts and highly skilled people that we can either bring at board level if required or as advisors to the company. But for that, we don't want to helicopter them in, right? So we want to have a conversation with the founders, talk to them, see what are the specific areas that they need us for, and that's where we would then see if we can find the right people to help them in this scaling exercise.
We're mostly hands-off, so we leave the companies to do their job because we are more of a financial investor. However, of course, we are trying to help them with future investment rounds, structuring of new rounds, and finding some partners, connections. I think if they want to scale internationally, it's very important to have international partners, because I think a common mistake is to try to scale up at a different market without having thorough research of its specificities, even the legal requirements, customer preferences, and all this. And I think it's much easier if you have local partners.
The way I look at it, they all bring money, and it's the same, money is the same whether you get it from one or the other. So this part, putting this part aside, what else do you expect and what do you realistically have to get from a VC? The main thing, to be honest, is your next round. So your VCs should be helpful for your next fundraise. The second thing is governance and guidance, because they have seen how things play out in different companies, likely companies that are similar to yours in some way or the other, because they usually have a certain investment thesis. So you can expect that they have not necessarily experience in terms of leading this, but experience in and being part of the boardroom in companies that have gone through the same things that you want to go through. So governance and guidance is what you would ideally get from your VCs besides the money. But I wouldn't, for example, expect from the investors to help you with your go-to-market or to create significant or meaningful sales motion for you. So you should be very careful to not overestimate how much you can get from your VCs and only focus on the things that really they are capable and it makes sense to ask for them. It's the funding, but then it's the governance and the guidance on getting through the milestones that the company at your stage goes through.
The journey doesn't stop after successfully navigating Series A. The next stage is Series B, where the focus shifts from proving potential to delivering results. It's all about scaling operations, expanding into new markets, and cementing a position in the industry. Stay tuned as we dive into Episode 4, exploring how startups take the leap to Series B and what it takes to achieve sustainable growth on a global scale.
This documentary is supported by EBRD,